Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Analyst at GDMFX. With today's outlook, starting with the US dollar, it strengthened from a one-month low against the yen on speculations. Its longest losing streak since July was unwarranted, given US economic growth is likely to outpace Japan's. And greenback rose for the third time in 4 days versus the euro, as analysts predict European data today will show industrial production slumped in August. Also, this is set to be released in about an hour time from now. Then the yen fell against most of its 16 major counterparts as US stock futures rallied, as well as damping demand for Japan's haven assets. So Australia's dollar gained for the second day after China's central bank cut interest rates. It pays lenders on repurchase agreements, now signaling possible monetary easing. And now, in a little more details, Japan's currency weakened for the first time in 4 days after closing above the 50-day exponential moving average, indicating it may be poised for a bearish reversal. Now, if the currency holds their losses to the close, it will set the stage for a ceiling to form at 106.76 yen per dollar. The pound fell to versus the dollar with a drop with 0.2% to $1.6056 per pound before the CPI reports today, which might show inflation slowed to the least in 5 years last month, adding to the pressure of Bank of England to keep interest rates at a record low. Growth in UK consumer price is forecast to show to 1.4% in the 12-month through September from 1.5% in August. Yields in Europe are getting crushed, reducing the allure for foreign investors. The European Central Bank's record low interest rates are pushing Japanese investors out of the region and into the US. The Federal Reserve is on course to end its bond buying this month, even if the Central Bank of Japan maintains record stimulus. The President Mario Draghi repeated over the weekend he's ready to expand the ECB's balance sheet by as much as 1 trillion euros. This is approximately $1.3 trillion. Briefly, in the commodity sector, gold traded the highest level in almost 4 weeks as speculations the US Federal Reserve may delay rising borrowing costs on slowing growth that hurts the dollar and boosted demand for a store of value. However, the price is facing a resistance around 1337.38, around the 200 exponential moving average on the 4-hour chart. Unless, of course, this level is breached, we might face a consolidation between a very tight range. West Texas Intermediate, it's wrote for the lowest price in 22 months on speculation that the rising US stockpiles are excessively hurting the global demand that's driven prices into a bear market. Oil futures have collapsed into bear market as shale supplies boosted US output to the highest level in almost 30 years on signs of weakening global demand. The biggest producers in OPEC are responding by cutting prices, sparking speculation that they will compete for the market for a market share rather than a reduced supply. That's all for me from today. Keep an eye on the economic calendar, important events up to about an hour time. Thanks a lot for watching. Bye-bye.